Hi, my name is Carol Pajot, and this is Miss Carol's Refresher Course. And this is Session 1. And what this course is about is this is a refresher course for allied health or business associate students, or else who might be interested in these topics. And what are we going to do today? Today we are going to start going over accounting or bookkeeping, same thing. This is the course that I last left off with my students, and I felt that I didn't give them the full potential of this course. So, therefore, what I'm going to do is start at the very beginning. If you were an alumni of mine, you're welcome to this course. This will help you go over some of the material that we started last year. If you are not an alumni and it's new to you, you're welcome to. You can benefit as well. Even though my students used a textbook, and if you still have a textbook, that's fine, but we are not going to be using this textbook. You do not need it. Everything is going to be included that you will need in this little mini course that we're going to do. Okay? I'm going to give you all the exercise sheets and the exercises as well. So, let's get started. So, today what we're going to do is a introductory lesson on introduction to accounting. Okay. So, what are we going to talk about today? Well, we'll go over what the purpose of accounting is. And then we'll describe all the accounting processes, as well as the different kinds of accounting procedures and perspectives. And then we'll talk about accounting or bookkeeping career opportunities and what's available. So, accounting, what is it? It is the language of business. It is how the businesses communicate financial information. You must learn this language in order to understand how businesses communicate with financial situations. It explains the impact of financial events. And what I mean by financial events, I mean like making a sale. That's a financial event. Or making a payment on maybe the mortgage of the building, or making payroll. That's a financial event. In order to understand the impact of business transactions, you'll need a clear understanding of the accounting language. And that's really what we're going to talk about today. Today we're just going to do a little introduction, and I'm going to give you some terms. It's a good idea to use a flashcard, write these terms down on a flashcard with the definitions and get used to them. Next week we will actually get down and do some exercises. Okay. So, what is the purpose of accounting? Well, we already explained that a little bit. It is to communicate financial information. It's also a way to look at current operation and past operations and to determine the condition of the business in regards to its financial health. It's to inform managers and executives of how the business is doing. It's to help the banks to determine the company's worth so that they'll know if the company is a risk or if they are enjoying financial health. And it's a way to record information for legal purposes, for tax purposes, payroll purposes. All right. And who uses this information? Well, in a business, you have many different people that are going to be using financial information. Not everybody is going to use every bit of information. Your owners and your managers, they're going to look at the overall health of the company, the overall financial condition of your assets versus your liabilities. Creditors are going to be looking at, just like the banks, like I said with the banks, whether your company has a profit and whether it can handle debts, and whether it has enough assets to cover any liabilities. And then, of course, government agencies, the company's profitability, cash flow, taxes, and whether they are transparent in putting forth the financial information of the company. All right, so accounting is a process. It's a process of 6 steps, and we're going to talk about these 6 steps. The first one is analyzing. Analyzing is looking at the events that have happened or have taken place and thinking about how they affect the business. I know it seems like a grand way of saying it, but it just simply means when somebody purchases something, they pay cash or in accounts receivable, that increases the company's assets. That's how it affects the business. Or if the company buys something on credit, then that affects that company's liabilities, their accounts payable. And so now their liabilities, they owe more in their liabilities. They might have an asset to account for that. For instance, if they bought a truck, they'll buy a truck. They have now liability because they have to make payments on that truck, accounts payable, but they also have on their possession a truck. So that's what I mean by analyzing. And then we have recording. This is entering, or another word for entering would be posting, financial information about events into the accounting system. Although this can be done with paper and pencil, which is what we're going to do, it also can be done on a computer, and it can be done with a hybrid type of system too, where you're entering some things on paper, when then that information is entered into the computer system. So different ways, different methods of doing these things. And then we have classifying. This is sorting or grouping through similar items together rather than merely a simple diary-like record of numerous events. What does that mean? Well, it's simply this. When we take in financial information, so let's say, for instance, you're in a business and you're taking in money because you're making sales, but you're also paying out. You're going to be recording all that information in what it's called a journal. And that journal is going to have payments and cash and sales and different things recorded on it, all in one long narrative. Well, from that, we go and post it. This is where we classify what is that transaction, what happened. And that way we know where we are to put that transaction. And that's going to become a little bit clearer when we talk about the different accounts we're going to create, such as our cash account, our accounts receivable, accounts payable. And now we have summarizing. This is the aggregation of many similar events to provide information that is easy to understand. Now I give an example here. A firm may buy and sell baseballs during the year. Summarizing provides information on the best of the total baseballs bought and sold and the change in the numbers sold. So for instance, baseballs with the purple thread sold better than the baseballs with the red thread. For some reason, maybe that color is more popular this year for whatever reason. Maybe the red thread because it's Southern California and we have the Angels, or the blue because of the Dodgers. I don't know. I know nothing about baseball. That's just an example. I just know that they use a baseball. Okay, and then reporting. This is the telling of the results. In accounting, it is common to use tables and tables to understand the numbers. So they might use a pie graph or a bar chart. Usually when you're reporting information to your managers and your owners, they want to see the big picture. And it's so much easier to see the big picture when you have a graph. If there's detailed information, you could always print out a report of that. But the pie chart or the bar graph or the line graph, however, whichever graph you use, will make it easy to understand and see the information in relation to other information. And I'm going to show you an example here. So, cake sales, cupcake sales. This is a company called Carol's Cupcake Sales for the first quarter of 2021. And here we have a bar graph. And what the bar graph is showing is how each of the different types of cupcakes sold and the different flavors. So, the first one was the chocolate ones. If you can see, they didn't do too well. The blue represents January, the orange or brown, whichever that is, represents the February, and then of course the gray is March. Now you notice the cake pops did very well. And what month did they do the best in? And if you can see, they did the best in February. Why did they do the best in February? Well, you think about what is related to February. Well, we have Valentine's Day. Cake pops are very popular. So that's interpreting. What I just did is I interpret. So that's deciding the meaning of the information and making various reports on that. This was a very simple one that I just used as an example. This may include a ratio analysis and help explain how pieces of information relate to others. Okay, so now we're going to talk about the different types of careers that you can look into as far as accounting is concerned. Now, the words accounting and bookkeeping, you'll hear me say these words interchangeably. The more common term is accounting. But basically, the way it used to be termed was bookkeeping is more about the recording of the information, whereas accounting was more about the interpreting. But today, it's used more interchangeably. So, just FYI. All right, so what career opportunities are available for somebody who's interested in this? Well, there's many different ones. There's accounting clerks, there's bookkeeping or bookkeepers or para-accountants, or there's accountants. And we'll talk about the different ones. An accountant is somebody who has a bachelor's degree in accounting. So if you want to be a full-fledged accountant, I would recommend going on and getting a bachelor's degree. And then, majoring in accounting. Then accounting clerk, a year of accounting, a 6-month course to a year, depending on it. Accounting clerks, it's not really a term we use too much anymore. It's more administrative assistants that we use with accounting skills or bookkeeping skills. A bookkeeper, again, is more of an accounting clerk, a year, 6 months to a year. And what types of areas an accountant or an accounting clerk might look into is auditing. Auditing involves the application of standard review and testing procedures to certain proper accounting policies. So you can go in, audit somebody's books, go in and audit somebody's tax returns, audit expenditures, how money is being spent, audit maybe how somebody is spending a particular amount of money that they've been given. The purpose is to provide an independent opinion that verifies that the financial information about a business is reported honestly. Taxation. The tax specialist advises on tax planning, preparing tax returns, and representing clients before government agencies such as the IRS. Or you may even work for the IRS. And then we have forensic accounting. Forensic accounting, it's similar to auditing, except you look more an eye towards looking for fraud prevention, and litigation support. It's a rapidly growing segment, and it's when a company might have, maybe they laundered some money, a forensic accountant can kind of go in and determine if these books are accurate or not. Or maybe there's money that's been put in a place it shouldn't be put in. They can go in and detect that there's something wrong. They may work with insurance companies, banks, law enforcement, or other organizations. Okay, well that's it for today. Today was kind of a short lesson. Next week we're going to get into the exercise, the different types of accounts, and the accounting equations, the assets equals liabilities plus owner's equity. So we will talk more about different types of exercises. You will not need any, I will provide those, but you will need a nice sharp number 2 pencil, or you can use a mechanical pencil and an eraser and a calculator or calculator on your phone. Okay? So this is Carol Peugeot for, this is a working title. If you have a suggestion for a better title, I'm all ears. So go ahead and put it down in the comments, because I want to hear about any other ideas. So for now, I'm calling refresher course. So and this covers allied health or business specialist or any of the other courses that I taught. This is geared towards my alumni, but it's bye-bye. Hi, this is Carol Peugeot, and don't forget to subscribe, to like, and to hit that bell, because we got a lot of good stuff coming. All right.